Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, April 14th, 2016. It's a little before 9 o'clock Eastern Time as I'm starting this video, so these charts aren't live yet. So this is yesterday's close, and I just wanted to go over the trade ideas that are on the site, as well as a few unofficial, which may be official trade ideas soon. You know, as I mentioned, guys, official, unofficial. There's typically the official trade ideas are the ones I have the highest degree of confidence in. I see the best levels. But keep in mind, there's just so many I have right now. Even the trade ideas I'm about to go over will be the existing longs in this video, as well as some of the unofficial ones, some that I've touched on, some I haven't. But all look good, and it becomes a function of time. To do an official trade idea, I have to put out a chart, a setup before it happens, or an entry when it happens. I update the trades every time a target's hit, and without fail, every single trade idea, win or lose, always gets archived, meaning I do a follow-up post if it's been stopped out or hit the final target. And that's the best way to keep track of the performance on the site, as well as a useful tool to go back and archive. You can look at trades going back to 2012, and so if you type in Apple, you can see every chart pattern that's ever been formed on Apple, at least my analysis, all the notes, everything else, or any other stock for that fact. So that's the reason for archiving these. And as I said, if there's a time in the markets like it has been lately, technical analysis is working great. I hear a lot of frustrations. I'm not going to say it's not working on the broad markets. What I continue to reiterate, and I've forecasted this months ago before it even happened, we're seeing sector rotation. I mentioned that a few months back, I see bullish sectors, bullish developments in certain sectors and stocks, and some bearish developments. And we've certainly seen that this year. And I think, I don't see anything in the charts that's going to change that going forward, and that's why the broad markets are kind of going nowhere here. They won't go down because energy commodities are doing too darn well, and that makes up a good component, as well as there's other sectors popping. So again, stock pickers market, sector rotation, and that's why it's been a tough road right now to short the broad markets, or to go long for that fact. Anyways, let's get off that and let's look at these trade ideas. I'll go through an order here. This is ABY. This is a long trade idea that you can reference the notes. I don't know the exact entry point, but it's already hit the first target, and we probably bought it here before this wedge broke out, I'm assuming, or maybe on the back test. Again, reference the notes. I own this one. It's in one account. This is a growth and income trade. This is a dividend-paying stock that's yielding better than north of 10%, or right around 10%. And so far, it looks great. We had this divergent low with this falling wedge. As you guys know, one of my favorite patterns of trade. It's very reliable, especially when confirmed with these wedges. And here's a story on ABY. If I draw from this point to that initial surge up, and this is so common the case, this is why I have these targets, within, probably basis points, we hit the first target, consolidated for a couple weeks around that level, and have pulled back. That's natural behavior. That needs to happen. That's more healthy than this stock going halfway up, because then it gets ahead of itself and comes back a little more. So what we're looking at here is a possible ABC correction. An ABC move. Maybe it turns into a 5-wave. Who knows? I'm not look at Elliott wave. In fact, I'm doing this video because I had feedback from somebody last night. We talked about a few things, Elliott wave, but he had really liked the fact I did this review of the outstanding trade ideas last week or so, and asked that I continue to do something like that going forward. So I will make an effort to do more active videos that just hit on everything real quick on the active trades, so that hopefully covers updates for anybody in any of these trades. So ABY, ABC, this would be a C up if we had some symmetry, and that takes us, above that second target I have. And there's also a reaction high here. You can see that could be a potential target, this reaction high back here, which measures out. Now, that doesn't have to happen just like that. Just something to note is, once again, this was a pretty extended run, especially for a utility stock. This is a non-U.S. utility stock. Pullback, and we're starting to move back up. Notice here, as I often mention, this zero line on the MACD acts as support when tested from above. We're curling up right on that right on the MACD 0 line. That looks good. RSI is punching back above 50. So, this isn't a get-rich-quick stock because it is a utility company. But it's I like these growth and income trades. I'm an aggressive investor by nature, but I also have longer term accounts, retirement accounts, and these are the type of things. And the growth and income trade ideas this year have done phenomenal. In fact, many of those have hit first or final profit targets within just weeks, where normally those trades they're intended for many months or more. So there's ABY. Anyways, I just want to mention it looks good. It's moving up, and if you're long the market or any of these stocks can turn on a dime. This level, it would be healthy to see this level hold. That is 1606, call it 16. So move much below 16, let's say 1595 or whatever. That would be a stop that would probably get you around break even. I can't recall exactly where we entered this. I haven't referenced the notes, but that would at least help protect profits. And your next resistance we need to take out are these recent reaction highs back here that came just above T1. That will be pretty bullish if and when we take that out, and probably bring us up to that second target level I have, which is still the final target at 2110. So there's ABY. Just going in order here alphabetically from the list. This is LL yesterday put on. Hoping to see some follow through today. As I mentioned, this is a potential short squeeze play. There's pretty high short interest. I checked that on there, and I know there's at least one prominent hedge fund investor who's taken a short. My comments were in the trading room on that, my thoughts, so I won't go into that here. First target's not too far away. Pretty well defined. Personally, I'd like to hold out if we get up there, especially if we start to see this thing take volume. So far, the volume has been suspect. It's been a little bit low, so I'm a little bit leery of this breakout. With that being said, the higher this one goes, the more short covering you would expect to see. Here's a trend line you can watch. You might want a 60-minute and especially a daily close above that trend line if you really want to keep your stops tight. There's also a horizontal level there. And again, this is a bottoming play, so this is a little bit more aggressive. But again, a close below this uptrend line, particularly this level here, 1350. I can't recall the exact suggested stop. I might have based that more on the RR to this final target, but this is a nice level. If you go back, just look at the gaps, look at for reaction highs, whether it's the body or the wick. In this case, the body on that candlestick, and then look at this support shelf back here. Beautiful, beautiful support right there. So that's a pretty key level, and that's around 1350. So you might want to stop a little bit below that. Whether you do it on any tick below 1345 or so, let's say, or you want to wait for a 60-minute or even a daily close. You just have to watch those charts. When I say a daily close, if a stock really starts plunging intraday, you might not want to wait to the end of the day. But if it's just meandering on down through there, you can give it a little time and see if, 359, if it looks like it's about to close under there, let it go or sell it. For something like this, unless the stock trades very actively in pre and post market, then you want to get out before the 4 o'clock bell. But otherwise, a lot of these you can close in, the more liquid stocks, I should say, in the aftermarket. All right, MOS. Somebody mentioned, just saw something today that they downgraded MOS and POT. Doesn't concern me. Those analysts are. Let me just try to be kind here, but I'm not overly concerned, and I almost use that as a contrarian buy or sell signal. They're so wrong so often. Those guys, for the most part. Again, I'm generally speaking, but so far this looks good. This was we ran up, hit that target, final target. I did an update on this yesterday, so check that out. I won't spend too much time. Mentioned it. I think I added it back on as an official long yesterday. And look, nice breakout through that channel. So let's see what happens today on the downgrade with both MOS and POT. But I don't see any cause for alarm. There's quite a bit, let's see. Ideally, it wants to hold these we want to see it, I should say, hold these recent reaction lows right down here. Let's see that. Can see these recent reaction lows, move that line down. That would be healthy to see that hold, and you really don't want to see it get much below that line there. All right. Next up in line is Nat. Nat's been on for a while, which is fine. Usually, this is a good example of a growth and income trade. We got this one somewhere way down here. This one has already hit. Did we hit one target? I think I had the targets on the weekly chart. No, I have that first target is that downtrend line, the yellow downtrend line. And it still looks good. This is probably that same downtrend line, give or take. That one was on a weekly chart just a second ago. But we're collecting a fat yield. It was even higher than 12% when we got it. What happens when the price goes up? If the dividend is fixed, your yield drops. So either way, call it 12%, north of 12, since, for those of you that got in earlier. These are the type of stocks that I'm putting in my longer term accounts. And, this also meshes with my recent bearish outlook for the shipping sector. And there's a possibility I may extend this trade because if the shipping sector takes off, I'm seeing some bullish developments in recent days. But if that takes off, this downtrend line can get taken out, and then we have this potential third target I mentioned up there. And I would not at all be surprised. In fact, I would highly expect this level to get hit if the top of this T2 zone here gets taken out. Why? Well, we have these reaction highs, and if you look, I know I have the volume of price histogram bars muted down a bit, but if you turn up the brightness on your monitor, you can probably make it out. There's a huge thin zone here between the top of this zone and this level here, and I talk about thin zones a lot. They're essentially, I don't want to say analogous, but very comparable to a gap because you had very few trades happen. This was just a support shelf that broke, and just in a couple days prices melted down, meaning there were very few trades that occurred here. And during a gap, you have zero trades. The same net effect. Thin zones get filled quickly, just like gaps do. And once they're entered from above, they tend to be backfilled. Rarely do you see prices get halfway up into a gap and then turn around and decide they're not going to go ahead and make the backfill. It's just, it happens, but it's more often than not those gaps are filled once they're entered from above or below. PEIX, still love it. It's a great looking chart. Weekly chart. You pull the static charts on these. I won't go over all the minor details. But this one, as I mentioned, we ran up, hit the first target, and then some, made it about 2/3 of the way to the second target, pulled back, only because that's such a healthy, it had such a run-up at that point. It's not marked here. I don't know why that came off, but this is a divergent low back here. I did mark divergent low. Oops, sorry. Get rid of that guy. Delete. There we go. Trying to grab this. There it is. Divergent low at that point. Nice run up. Healthy pullback, which it needed to work off these overbought conditions right here. Back the PPOs curling back up. We're looking at a daily chart here. In fact, let's go back to a MACD on the daily. That's probably why a lot of these weren't marked up. Same story, you just don't see the divergence as much because this has a large, probably a PPO would be a better option on this because you see a price range from $225 up to $30. When you see these large price ranges, you're better off with a PPO than a MACD. But a normal, typical charts on a daily time frame, I'll use a MACD. So there it is, nice thrust up, pull back to help work off those overbought conditions. And, even if this is just an ABC move up or something comparable, you're looking at there's the A up, we just had the B down, and that would probably take us to that potential target, which, again, I've been throughout the year bullish on the energy sector, oil, everything energy related. And there's a good chance that I'll extend profit targets as and if the charts continue to firm up. That's why I put these potential targets. But until they're made official, this stands right now as my final target at 615. And, as far as what this stock should do, you can see that pullback was a great area. That was a key level. That's why I had that blue line there, 380. It measures this reaction low or captures that reaction low, these reaction highs, this base, this ascending triangle. There was the breakout and back tested that level. So this is what needs a hold. You want to see this reaction low right here on that candlestick. You want to see prices remain above there. Otherwise, the bullish case starts to diminish quickly, and that's where you can set your stop a little bit below there. What's next? Potash. Potash, same story, big run up. I mentioned this one yesterday, an update. We missed within, I think, 9 cents that third target. We already hit the second target and the first target. Second target was actually hit back here. So you're very profitable. Growth and income trade. This one's yielding 6.18%. And so far, we have a higher low. So, an uptrend is simply defined as a series of higher highs, in this case, high, and higher lows. And, this is what you'd call potentially an uptrend, very early stages. So you can draw these lines any way you want it. And, that's what you see prices, just like we were making a series of lower lows and lower highs all the way down. So, like I say, some work to be done to firm up the bullish cases, and you can reference all the static charts. It's not just one time frame I look at. Here's a weekly chart, key long-term support where pot so far held, and it's back-tested that long-term support here. So it would be bullish if we can move off that level. That would be another successful, give or take. You don't split hairs when you're looking at a daily chart. It's, we don't have to get to those lows. That's close enough. In fact, this was an overshoot. This was a momentum overshoot, and you can see most of these candles here. They were intra-week pierces below, but the prices managed to close back above. So, pot definitely has its work cut out for it, but has a lot of potential as a bottoming stock, and over time, just depending on how strong the sector is in the markets, this thing could see 30 again, in the next year or two. And it could most certainly see any of these targets anytime this year, in the coming months. So, again, just got to hold those levels. If support goes, that line first would be your first warning sign, and then more importantly, those recent lows there. All right, moving on to soybean. I haven't updated this one in a while. I still like these ag commodities. The charts are all there. Corn, sugar, all kinds of the different grains and beans. And soybean is probably in need of an update. Hopefully this will happen today. This was, again, reference the charts. Nice bullish wedge, breakout. I had an alternative downtrend line. We already hit the first target. And now, yesterday, we came within 1 penny. T2 is 18.90. And if you look at the left, you can see this thing hit a high yesterday of 18.89. So, I might extend this one. I'll let you know today. I'll put a static post up on it. We'll see if it hits the that target. I need to get that post out quick because I make a habit. If I don't extend a target ahead of time, then I just, even if I think the stock looks great, because that's just not fair to after the fact say, oh, well, I'm going to extend this one because it went through. So I've always had a policy, unless I can get that out ahead of time, I'll just have to officially close the trade there. I'll share my thoughts if I stay long myself or if I think it's going up here. That I'll do. At least let you know. But here it is from a weekly chart, soybeans. And look at that nice weekly divergence. This is my theme and has been. This is 2016, the year of the commodities. If I had to put all my money in any one asset class, turn around and walk away for the next year or two, it would be commodities, and it would definitely not be U.S. equities. So there's your weekly pattern, and this would be a nice breakout if we get above here. You can see this descending price channel, nice even parallel channel, divergence, and said and done, soybeans probably see that level right there, 21.62. Over time. So if I extend the targets, or even if I don't, and you're a longer-term investor, then those are the targets you want to watch. WMB, last one up on the active lawns right now. I just put this one on earlier this week, I think it was, just a few days ago, maybe over the weekend. So far, so good. It broke out, took out the both the downtrend line, that minor downtrend line, and the resistance level. This is a fat yielding, 14.5% dividend yield, so you're getting paid to wait, even if it takes a little while to get there. But so far, it looks good. Can't knock this chart one bit. We do have that target here at 1972. The actual resistance level, as you can see when I hover that line, is 1990. That's what I do. I set my price targets below the actual resistance levels to help assure a fill and not miss a thing reversing within a few pennies. There's a second potential target, this downtrend line, and that would be, if and when we get there, a pretty bullish event. Now, I expect a reaction. My guess on this one is we take out T1, come up to that T2 level. You can also see some horizontal resistance and maybe base for a little bit to for the stock to build the energy to make a sustained breakout of this T2 level. And then over time, if the energy sector continues to hold up, this would be my ultimate long-term target, 34.60, somewhere around there. All right, let's go into a few that aren't on the site. These are ones I've been watching, and no particular order. Actually, a little bit of order. Let me start with some of the growth and income ideas that I'm looking at. I think this one's growth and income. Let's see if I have this. Yeah, okay, here's one yielding 12.34%. NRF, North Star Realty. I have this downtrend line. I'm not crazy about it because it only has 3 reactions so far, but it also coincides with this. See this? Look at how the stocks have been tapping on this ceiling right here. Nice horizontal resistance level, right around 1353 or so. And yeah, I'm not. I'm okay with that MACD at that level. Even though prices are high, this thing's pretty overbought. It's the fact it's been pressing up against there. So a break above that level, and I may add this as an official trade. I haven't done so yet. It's a little bit. Well, I'll share my concerns in a static post. Just a level I wanted to point out for you guys that might be looking for growth and income trades. And if you want to jump in now because of the high dividend and set a stop below this recent tight sideways trading range, it's somewhat objective because if and when this thing breaks out, there's one area, 1713. I could see it going to possibly the 1630 area. There's a big gap up here to backfill, so that one has some potential longer term. Staples, SPLS. Like this one is another growth and income trade. They all don't have to be double digits. In fact, when you see those double digit dividend yields, that's typically energy sector or something that carries a considerably elevated degree of risk. I know I was in the car this morning listening to NPR. Who was it? Another coal company just filed for bankruptcy protection. So the energy and coal is, of course, the worst of the energy sector. But the point is that the mess isn't over. Even though prices have seemed to stabilize as of recently, a lot of these stocks. This is Staples, by the way. I'm kind of getting off on a tangent, just pointing out that 4.25%, 4.3% dividend yield in a zero interest rate environment with capital appreciation. Remember, my growth and income trade ideas aren't income trade. I'm not just chasing yields. I'm taking the same premise I use for swing trading or anything else, bullish charts that show me that there's likely going to be capital appreciation, and then couple that with the higher dividend stocks. So, really anything yielding 3% above, I would consider a growth and income candidate. And, that's not a bad dividend yield. And so you can see it already broke out. It's consolidating here, somewhat flaggish type action. Does have resistance right here, 1167 to contend with. It has a few levels, but those could also be targets. And 1167. That's if I can capture roughly where we are. That's still a 3.5% gain. Not bad for some people. Most of my trades are double digits or more. But you can see these levels, 10% gain. If we get up here, this would be my final, my not even final, but really my preferred target on Staples if I decide to add that as an official trade and or take it. That's almost a 20% gain in addition to sitting here collecting, a dividend at an annual rate of 4.25% a year. So divergent low and everything else it confirmed. Let's see if I had anything on the weekly chart. Nope. All right, a couple more. We'll wrap this up. CSX. So railroad stock, look at this nice downtrend line. Almost a head and shoulders pattern right here with the left shoulder, head, right shoulder. Except the neck at this point on the left shoulder never really touched the neckline. But that's some moot. More importantly, we have some horizontal resistance here, former support. And that comes in right where that downtrend line does. So if and when that pops, decent dividend yield, almost 3%. This one will probably carry this stock up to the almost 30-ish area. That would be an ideal target right there. So there's CSX, another idea. And then this might have been from Lee 1 in the trading room. Lee 1's Canadian. I mentioned to Lee I'll take a look at some other Canadian stocks. But type that in wrong. BBD. I'm looking for Bombardier. BBD. Here it is. Okay. This is, Bombardier. They make, I've got a couple in the backyard, Sea-Doos, Snow-Doos. I think of what they call them, Ski-Doos. I have the Sea-Doo, which is a watercraft, like a jet ski. They make the Ski-Doos, which are snowmobiles. Rode one of those last year for the first time. That was a blast. Evinrude boat motors, a lot of stuff, jets, if I'm not mistaken. So, big company. Oh, great company, great products. I like their products. And what we're looking at here is a nice breakout recently. See this downtrend line? We had everything I like to see in a stock, a divergent low, also on the RSI, MACD, and prices have been, we back tested. I mean, this is just perfect, a perfect chart. Breakout. It was extended to get to that breakout. We had a little consolidation here, but since then it back tested, it's consolidated. We have these two highs. So far, what would you need to see is a break over that. I put that line right now. I just drew it in at 144. So call it 145 to be safe. And if it punches up through there, you can see the levels that I have on this one. So there's another candidate there. Finally, let's just wrap this up. I put these in a static post last night, so I won't spend a lot of time. I mentioned did the video on Sunday, this last Sunday on the global equity markets, and the three that stood out to me were FXI, which popped yesterday, a big fat gap up. So China's looking a lot better now. It's taken out that level I mentioned, that 34.28 level. Those are all potential targets if you're looking for some international exposure or long exposure. If somebody put a gun to my head and said you have to be fully invested in equities over the next year, it would be these three, or at least international markets and not U.S. equities. I can tell you that right now. Let's see what else. RSX, Russia. Looks like a possible bull and the bear. See if the Russian bear can mount a bull market here. This is a nice chart. Very, very well-defined downtrend line, breakout, a little descending price channel / bull flagging action. Remember, this is I already covered this one a couple times, I think, in static post and video. This is a bull flag right here, right above, which is beautiful, right above that downtrend line. So, if that thing plays out to where it measures, here's my target. And so what I do, I take the projected measurement, and if my target comes in first, which it does here, that would be my target. So I own, I'm long Russia, and I think that one's headed up unless things really turn around. This would definitely be the first target. I put here several reactions, so I'd expect a reaction there, but this is where, I'm looking this one longer term right now, plus some exposure hedging, if you will, to the U.S. equity shorts. I don't have much. I still have that IWM or TNA short, but really just plain individual stocks now. And what else did I mention last night? EWA, Australia, another commodity dependent or commodity heavy economy, and commodities have been where it's at. Everything's firming up. Crude, natural gas, oil. Oh, I'll mention another one here too. I hadn't. Anyways, this one was posted last night in the on the front page. So we have this downtrend line to take out, which would be bullish, most certainly. Although we do have horizontal, when two lines are close together, I call that a support or a resistance zone. So the safest play is to wait for a break of the top of that. Although you could take a starter position here and wait for a breakout. If that happens, pretty thin over here on the volume price histogram. So my expectation would be, for a continued move up to that 2170-ish area, and then probably onto there. Again, if global markets hold up. And, unfortunately, there is a mixed bag of data out there because the global markets are so intertwined. There are some that do better when others aren't, but if the U.S. markets take that dive that so many are looking for, and I was looking for, and I'm still haven't ruled out yet, I can still see the U.S. markets taking another leg down, but I'm lukewarm on it right now. We're just refusing to roll over, and more so is I'm seeing too many bullish setups in the energy sector and basic materials. So, but I want to say that Australia's probably not going to go up. What is that in percentage terms? 15%, with the U.S. markets dropping 15%. In fact, I'll guarantee they won't. That would be, well, I can't guarantee it, but tell you that highly unlikely to see that happen. So Yeah, everything tends to move. These world markets, especially the developed markets, tend to move together for the most part. Copper. Yeah, I looked at China the other day and I'm thinking, well, what is with China's bullish? Well, what about copper? Copper took it on the chin when China started taking on the chin. China's a huge consumer of copper. And I overlaid the charts, and they track well. You can do it. Put a 10-year long-term chart and overlay copper. So copper's looking good here. We all know that gold, silver, platinum, a lot of these, the precious metals took off. So I think it's time we're going to see some of the industrial metals if China continues to build on those gains. That's conditional. If the Chinese economy improves, even the stock market. Okay, sometimes the stock market and the economy are two different things. There's a disconnect there, but I think traders will focus here. I see a nice little inverse head and shoulders pattern. I'll draw it out for you guys who aren't familiar with those. You see a left shoulder here. You see a head right here. And then you see a right shoulder down there. Right. So head. I'm sorry. Left shoulder. Head, right shoulder, neckline, breakout. Came back tested a little lower, but so far it's moving back up. This would be your first target, those previous reaction highs, and then up any of these lines. This was from an old trade back here where we hit just the first target and then it rolled back over. So that's one to watch. And we had, by the way, along with that, inverse head and shoulders bottoming pattern, we had this bullish falling wedge confirmed with bullish or positive divergence below, and that's why I like that. So copper is definitely one to watch. Don't have much marked up on the weekly chart. Let me wrap it up there, guys, so I can get this video out. And let's see, do I have one more written down on my sheet here? Yeah, I do. Here's another one, Full Circle Capital. If I'm not mistaken, this one I put in my watch list. I went through, in the trading room, I've been pretty bullish on these little penny, uber high risk marijuana stocks, cannabis stocks, proper term. This one showed up as in that sector, and I'm guessing I did a little due diligence on it. It's they provide seed capital. It's a financial company, and my guess is they're seeding a lot of these little marijuana startups. So this isn't a pure cannabis play, it's an indirect play, but nice chart, here's a look at the downtrend line, recent breakout, and like a lot of the stocks I just covered, they were confirmed with divergence, by the way, that low, and it's flagging just above the breakpoint. So what I did here, this is the measurement of the flag. There's your flagpole, there's your bull flag, and it comes right up to, which is a solid target here, this $3 level. So at 250 right now, you might say, oh, what's 50 cents? Well, 50 cents on 250, that's about 20% return right there, just using my screen grab tool. So, is it high risk, higher risk? It's only, it's not a penny stock, but it's only selling at 250 a share. Anyways, just another idea to share. Okay, guys, I'll wrap it up here, and any standouts I try to put on the front page, but as I said, there's just so much I'm seeing right now that from a management point of view, I cannot put these all up as active trade ideas. So find what you like, what fits your trading style, pass on the ones that don't, and if you have any questions, by all means, I'm available in the trading room. Shoot me a private message or post publicly if you think it's something that others can benefit from. If I'm going to put up a chart, I'd rather put it up in the trading room for others to see and benefit from. So this has been Randy Finney with Right Side of the Chart. Have a great trading day.